Wall Street Beats. It is one day before my birthday, January 13th. Um, I'm joined by Robert Marson and Kevin Bakes Baker, who thinks it's funny that I'm getting older. One day I'll lose my hair.
I'll sing. Tomorrow I'll sing to you. Promise, promise or threat. You decide.
Okay, thanks, bud. Um, all right, so let's get it going. It's been a crazy start to the year, boys. Silver's already up over 20%. Kevin, what are we talking about with silver? What are we talking about else with you today as well?
Uh, Let me get my chart going here. Sorry. Why can't I get this going? Here we go. I'm talking about SIL today, and I doubled my money in 7 months. While it gets a lot of headlines now, my buy is back here in June. And as I've talked before on different shows, my discipline is I'm not going to draw the arrows. I don't have the patience. But at the open yesterday, I let half go because you don't make doubles in 7 months too often. And so my discipline is you're going to have some, dramatic pullbacks, and I want to at least, have some profits to book. Well, now I have pure profit here. I am just letting my winner run, and it's as psychological as anything. Um, I'm a bull. It's a parabola, but it's my parabola. And we're on the left side of the parabola for now. There will be a right side and it will come down, but I'm going to be smart. And anytime my any names, but especially silver, I also own SLVR. That's my other, the Sprott silver ETF. I'm going to peel off when I get to 13, 14% of the portfolio. I'm going to peel it back to 10. I've already done that with SLVR, and with Global X Silver SIL. I've taken half off the table, and it's still I'm probably 15% of my portfolio is silver as we hit $88 when I signed off to do the show. So my winners pay for my losers. This is a winner. I'm going to let it keep winning, but I'm going to be selling incrementally as we go north. That's what I have.
I
All
owe
right,
silver.
I owe
Sorry?
silver away.
I owe silver.
That is a good one. It was funny when silver got going. I don't know, about a year ago or earlier this year, whatever, and I was long. I started using that meme. That was a good one, or whatever, Roy Rogers, and it was pretty funny. Anything else, Kevin, that you're looking at this morning?
Just real quick, updating on relatively new buys. I mean, I'm kind of the metals fund right now, but that's what the when I go through 5,300 plus charts, these are the 10 best, and I just went through them again last night. And this is nickel. Nickel's a buy here on January 5th, and I'm up 8% in a week, and we'll see how this goes. I'm struck by, this is. I think the next time you stop is this high here, back at 27 or so. So, and I think we got room to work here. Indonesia has apparently cut supply dramatically. They're the big kahuna in nickel production. It's used in EV batteries, although there's a big shift to lithium. But price is price, and lithium is dramatically going north. And I think this has room to run to at least this. I guess 23, 24 level, and and it has all the things that I like. Big up volume, meaning fund flows are coming here, and people are underexposed and they want to get exposed. And there isn't a S&P hugging manager that's going to be touching nickel anytime soon, and I kind of like it.
I mean, look, a lot of people I know are buying zinc and metals, nickel, copper. The metals have been pretty impressive, and I was listening to Robert Friedland talk the other day, and he was saying people just are not aware of like how much metals are needed for all these projects and new tech and stuff that they're trying to build. So
Yep.
we'll see, but it definitely seems like there's a big re-rating going on globally in industrial metals as we speak. And silver is an industrial metal. Let's be clear. Funny thing about silver is I was reading last year industrial demand was down. So industrial demand was down, which means this is completely speculative. This is a wild speculation. I was under the impression industrial demand was up last year, but if industrial demand's down, that means it's just a wildly speculative move.
Is it okay if I keep the money?
Oh,
Can I keep the
totally.
money?
I hope
Okay.
you do.
I just wanted to make sure I can keep the money. There we go.
The money.
Well, but things can go. I mean, ask Robert. Okay, so Abercrombie and Fitch goes from $40 to $180 to $60 to $125, and now it was down 20% yesterday. The
Right.
things that are that operate in these kind of parabolas you can lose a lot of money a lot of quick in a quick period. Is all I'm trying to say.
Well, but I can't because it's pure profit. I've already got my money back on the original
I'm not just
investment.
talking to you. I'm talking
Yeah,
to
no,
general
but
to people who are listening.
Yeah, and we're all big boys. I've been doing this a long time, and I know exactly what
girls.
it feels.
We have a couple girls.
Big girls, sorry, not on this show. Not on this show.
Probably small girls. I don't know. We're getting myself into trouble here.
Yeah, you're getting canceled. So my eyes are wide open, and that's why I want to tell our members. This is always, we don't give investment advice. We just say, here's what we're actually doing, and I literally go through my account and say, okay, this is the buy, here's the sell, and you do with that what you will. And I doubt anybody bought silver in June because Bake said so, or Bake's bought it. But maybe the next time you pick up an idea and give it some more scrutiny and do your own due diligence.
Okay, sounds good. Robert, what are we talking about today? Your SEMO idea, you're updating us on that. That's been fantastic.
Yeah, they kicked off the roadshow and conference season today with a conference call. A couple of weeks ago, or 3 weeks ago now, they had a conference presentation at UBS where they talked about a new business opportunity they had with NVIDIA. And the stock went up a little bit on that. But then when NVIDIA showed their newest generation Vera Rubin product, it turns out that they have a few modules in it. And if NVIDIA is selling millions of these supercomputers, because they really are, they're not a chip. To say it's a chip is nuts. There's 17,000 discrete parts. It's like a computer in a tray, a supercomputer in a tray. And I don't know what it's going to sell for. How many? 50,000, 100? I have no idea what they're going to sell for. But these guys have a couple of modules in here. The modules is around $100, maybe $80 to $100. And if NVIDIA sells a few million of these next year, well, that's a few $100 million, and they're only $1 billion company. So that's a material new business. So when NVIDIA showed the product at CES, the stock had 2, 10, 12% days back to back. I definitely have to factor this into my 2027 and 2028 earnings model, and I'm trying to figure out with the company how much revenue and profit to assign to it potentially. But they haven't yet wanted to size it to anybody publicly or privately, I believe. So I'm still working on that. But my already crazy high street numbers, at least now I feel very good about them. And perhaps they're low by a not insignificant amount. So that was the reason for, and I'm still a buyer of dips, but we when we got down to 80, I had told Bakes I was going to buy it in the 70s. It never got there, and I never got a chance to buy it. So now it's sort of back towards the old high at around 117, I think, today. And I'm not even thinking about selling it. I've had a double. I'm gonna not do my 25 by 100 rule, which is sell 25% when you have 100% trade, because I think this could be a $200 to $250 stock in a few years, and that's where I'm standing with that. The other stock, I talked with the company recently, and they had a presentation, Ceragon, which is the telecommunications company that makes 5G wireless data backhaul equipment that transmits data. It's fixed, it's not cellular, so it's a different frequency, it's cheaper, and it just extends the network where you can't put fiber. And on a global basis, they had a very poor year in 2025, but in 2026, they 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 announced that they came up a million or 2 million short in the December quarter, but then they gave an outlook to 2026 that was nicely higher, 4% higher than the street estimate, with the high end of the range being 15% sales growth, and they had the street was at 5%. So if they do the high end, and I don't buy a stock unless I think the company's doing the high end of the range. That's how you make two, three, four baggers. That company, if they do the high end of the range, and there was kind of news today for me, and that is that Nokia had said they were going to sell their microwave backhaul business about a month ago, and the company is talking about that uncertainty has put Nokia's clientele, their customer base, in a little bit of a tizzy, and they're already seeing interest from some of Nokia's customers that don't know what's going to happen with this Nokia division. So there's that. There's the AI at the edge. There's the private network business is growing strongly this year, and I would hope I was early in my growth story for the company, because I don't buy companies that shrink 10 or 15% willingly. They're my mistakes. So this has been a round trip mistake for me. It's around my cost basis, maybe 10 or 15 cents below it. As far as mistakes go, that's been relatively painless. It's not cost me a lot of money yet, but I didn't sell it with a double because I thought I had 3 to 5x in it. And what I heard, in this company's presentation, their public presentation last week, and with comments with them privately since, was that they have world class technology. They have technology that no one else can do. So they're distancing themselves with the competition. The customers are more interested than ever. They have their biggest upper level funnel than I ever had by a lot, according to management. And now they just have to work these proposals and RFPs through the stage of winning them, papering the contracts, starting to ship the products. A lot of the products were new, so it takes time for the customers to test them and decide on how to deploy them and where. So by the second half of this year, I believe they'll be at about a 20% higher run rate in revenue than they were last quarter. So 20% is a big difference, maybe 25%. And if they get there, I could see the stock being back to $4, where it was for a good chunk of last year, from 220 today. So I'm sticking with it, even though I've been wrong. I'm hopeful. I'm early, and I'm not just going to capitulate, because the growth that I forecasted, while delayed, I still think it's going to happen.
Fantastic. And don't want to fault you for having a mistake here and there, Robert. You've been quite good. You had some real good stocks this year, buddy. So
Amen.
Don't sweat it.
Amen.
I don't want, when they work. When they work, I don't have to apologize, and I don't have to.
That's true.
I don't have to beat up the CEOs either. It's only the mistakes that you have to go to work on. It's what anybody can trade a winner. It's how do you deal with your losers? And I don't marry my losers. I'm like Bakes. When I make a mistake, I try to cut my losses. But every once in a while, I prematurely remove a story that I like for 3 to 5 years after 4 bad quarters. of disappointment. And I did that with Select Water, and I took a 50% profit, and we'll see what happens there. I might have been selling, at the wrong time, but they just delivered terrible results relative to my expectations for the last year. So these guys are the same thing, but I'm choosing to give these guys another year because I really think there's a product cycle and investment cycle in 5G driven by data created from AI that's going to give these guys 10 or 20% sales growth per year for the next 3 or 4 years. And when that happens, you're going to get 50 cents in earnings and a 20 PE gives you a $10 stock. So that's what I hope they could deliver in 2027, 2028 on a run rate basis. So that's my story, and I'm sticking with it for now.
All right. And last thing, to come back to silver real quick. Yesterday, the Chicago Mercantile Exchange, which for all the listeners know, I spent 2 summers there as a runner when I was in college, back when the traders used to actually trade with their hands, and the Eurodollar pit. But the Mercantile Exchange is changing the way they're doing margin for gold and silver from a fixed dollar amount to a notional percentage amount. And you should this is something, it takes effect at the end of today. So this morning I was looking at silver up 3%, gold's flat, and I was surprised, but then I just looked at the details. So it will take into effect at the end of the day today. Let's see what happens there, because that is actually a reduction in leverage, it makes the leverage less attractive. Because if you think about how this works, say put 100 grand into a silver contract, or 1 point or whatever, some of the silver contracts, and I'm just using this for easy math, and 9% is the margin, you put in 9 grand. Well, in the old model, that 9 grand stays steady as your initial margin. If we go up, well, this thing's going up 5% clips a day, but say 5%, you go to 105K. Well, that 5K then accrues to your 9K, so you have 14K of margin. Whereas now you're going to have to continuously post margin as it goes up. So it actually makes having leverage less attractive for people, because you're not actually getting that equitization as the price appreciates. You're just getting the steady leverage. But by the way, you don't have the steady leverage on the downside. So you now have a negative convex profile from a leverage standpoint. So it's worth watching to see what happens there. The generally when these margin changes happen, this is kind of where things kind of top out. But so far, all these have not worked yet. So maybe this is just a historic time. We'll see.
Are, are
That's
they
all I had.
are they doing this to try to temper leverage and temper the parabola?
Of course, yes. Yeah,
And
to temper the parabola.
right, and when it reverses, it'll be if and when the price reverse, they'll reverse this. This is not a permanent change, or it's temporary for the current condition, right?
They weren't specific. Usually these things are temporary. Like, because what is an exchange? An exchange is trying to get you to trade volume, right? But they're also trying to maintain price order at some level. And this kind
Right.
of action is massive speculation, right? Because people are getting paid through the roof to be long silver futures. And just so everyone knows, the big boy silver contract is a big one. That's 5,000 ounces. Okay, so right now, it's a little bit under $90. You're talking about $500,000 on what looks like maybe an 8 vol, 7 vol asset, right? So when I say that, I mean the daily move is 7-8%, 5-6%, which you're talking about wild swings, and so they don't want people to get blown out, and so they try to do this to temper speculation. And then let's just say we go back to a silver bear market at some point down the road. Well, then you'll take it down because you're trying to induce demand, right? You're trying to induce more people to take control of it. So yeah, the rules change a little bit based on what's going on in the exchange and what's going on with the specific market that's being traded. What were you gonna say, Kevin? I saw you say something.
This is what they did with the Hunt brothers, right? In 79, 80, they just kept raising the margin requirements until they said no mas.
Yeah, I think that's basically what's going on. I mean, and I know, Charlie and I were talking on my podcast last Thursday about this, and some of these banks have exposure. Now it's not like they have so much exposure it's gonna like ruin them or anything, but it's gonna. We'll see. Bank earnings start this week, and it should show up on the FICC, the fixed income, and the part of their trading revenue. And if it's light, some of these guys probably took a hit on this. But yeah, so we'll see. We'll see how it goes. I think that's it for today, though, boys. Anything else? Kept it right
That's it.
on time. All
That's
right,
Rock on.
that's fantastic. 30 minutes. Wall Street Beats. I'm Ben Bry. It's Kevin Bakes Baker, and that is our sad Eagles fan, Robert Marson, and I'm a sad Packers fan. Our season's over. Only Kevin's still cheering for his Pats. All right, see you guys tomorrow.
Bye.
Keep
Nice
smiling.
guy.
Thank you, folks. Thanks, Jen.
All right, guys. Later.